What's up, traders? Anthony Crudele here, and welcome to the Futures Radio Show podcast. Trading is a deeply personal journey of highs and lows with a lot of tough lessons learned along the way. I'm a firm believer that being a part of a trading community or having a mentor can make that journey much smoother. In today's episode, I'm joined by veteran futures trader Pax to discuss the significance of having a trading mentor and how it can help you grow and unlock your full potential in the market. We'll reflect on the crucial role that mentors played in his career and in my career, how to find an authentic mentor in today's digital world, the importance of embracing individuality, and some of the most common pitfalls that Pax sees in newer traders, and the advice that he would give them. Now, stay tuned until the end of the show where we will announce one lucky winner for a 1 hour long one-on-one mentorship session with Pax. So let's get started. Today's podcast is sponsored by EdgeClear. Futures Radio Show listeners can now trade at EdgeClear for a low introductory rate of 59 cents for most futures products and 20 cents for micro products and event contracts. Fund with as little as $100 and pair this with Sierra Chart's Teton order routing to receive one of the lowest all-in fees in the industry. For new EdgeClear members only, check it out at edgeclear.com/deli. That's edgeclear.com/deli. Now, joining me for today's discussion is my big brother, Pax. Although we are not brothers, I call him Big Brother because we have a long 25-year relationship going all the way back to the trading floor. And before I get Pax in here, I want to remind all of you that Futures Radio Show podcasts are recorded and posted on iTunes, Spotify, and everywhere where you listen to your podcasts. Now, throughout today's live discussion, subscribers to this channel can ask us questions in the chat. So please take a quick second and subscribe to the channel and hit that like button as I look forward to chatting with all of you throughout today's show. Now, there he is, Big Bro Pax. What's up, buddy? Oh, he's muted. I got to unmute him. There he is.
How can you possibly mute me? That's unbelievable.
I know. Well, I'll be muting you at some point throughout the way because we know how much you like to talk, which is good for today because I'm a little under the weather and I'm going to let you really dive into this important topic. I mean, you and I, we talk about this a lot on social media. We talk about the importance of mentors. We talk about people that have impacted our lives, specifically Mickey Hoffman. You and I have mentioned him. We've done shows with him over the years. And when you go back to our time on the trading floor, which is obviously not able for a lot of these traders to experience what we experienced, but when we were on the floor, we didn't know many of our mentors. We watched them, we learned from them, kind of like maybe what people see on social media today. You could watch and learn from people you don't know. We were able to ask them questions when passing them in the hallways or when they walked out of the pit. Now, you've been doing this a long time. You're a veteran trader, obviously, many years of experience under your belt. Was there a specific mentor in your early trading career years that helped shape you into the trader that you are today?
Yeah, you know, we have had, I don't know, the very first guy that kind of was like a mentor to me was when I was a clerk. I had just started holding a deck in lumber. John Fisher, his badge was Joff, told me, "Hey, you've got some talent for this." And so that gave me hope that hey, listen, I can make something out of this. When I got my membership after, clerking for a bunch of people and I earned my way up to get my seat, I had learned and took something from each person. The major difference between what traders go through now and what we could go through is that we can see, we knew people were real because we can see them. I could watch them. I worked for them in many cases. So when I started trading, I thought that the things that I had learned previous to that as a clerk, and I was a very good clerk and a highly paid clerk, was going to transfer into a successful trading career, and it just didn't work that way. So I signed up and took that class with Mickey Hoffman that both of us took, the University of Trading that 6,000 other traders had gone through. And yet, that helped me prepare my mind. It helped me prepare for the day, but it didn't teach me how to trade. Mickey has become like a father to me, and we are still in contact. I love him. I had gotten down to just $250 left in my trading account, and something had happened that day. God had moved into my life by bringing a guy, Judd Hirschberg, who's a former yen trader, into my life that day, and he told me that he's going to teach me a way to trade that will work on the floor, off the floor, any time in the world, any place in the world. As long as there's an open, a close, a high, and a low, you can be profitable. And that was the opening range concept on the trading floor that I've applied and learned how to do on the screens. So without Mickey and everything that I learned about being and mindset and preparing and everything that we had learned from him, and without that coupled with what I had learned from Judd, just the basics of the opening range and technicals and how I do my technicals and all of that, I would never have been able to make money as a trader, let alone sustain it. Or, after I blew myself up, after MF Global failed and I blew myself up, how to, without Mickey's love and support and kick in the ass, I would never have been able to rebuild as I have from there without having those guys in my life, as well as the myriad other people, that we have learned from through the years. It was so much easier, I think, on the floor because we could see, I can sit and watch Louis Borsellino trade and emulate him, as a clerk. I could, Ira Harris, somebody else who's like my macro analyst that both of us love. I started to talk to Ira because somebody told me that he was a good macro trader. So I started to say hello to him and I got to know him. To this day, he comes in and talks to my traders in the PAX group and explains his macro view of things. We were very, very blessed to come up the way that we did. Now we've got guys on Twitter, 25-year-old kids, holding themselves out to be mentors. For what? Or people flashing pictures of Ferraris and Porsches and things. And, that's not what I want to learn. I don't want to learn that. Money comes and goes. It's fleeting. We both know that. We have to learn how to protect it, grow it, and accept it and deal with it and everything,
Yeah. And I think the important point I want everyone to take from what you just talked about is that there were several mentors throughout our career that were really impactful for us. We talk about Mickey. I got a story about him, which I'll share in a minute, but he was really more of like we said, a father figure, somebody who understood the business. I mean, you and I couldn't go talk to our dad about this because they didn't understand our business, right? So Mickey was like that dad for us in this industry, right? So psychologically, he was a good mentor for us. I had Louis Lauder who really taught me. He's like, just watch the NASDAQ or figure it out, and he just talked to me in a different tone and put that pressure on me. Vince, who was another one, like a big brother like you, who loosen up, Deli, you know what I mean? Relax, you're going to be okay. And just so many different guys, like you said, Ira, to teach me the macro side of things. And there's different things you take from different people. Although I know that it can't be matched where we came from because we're actually able to physically see these people. I still think that there are a lot of good communities and a lot of traders out there. But I think the lesson for the people out there is to understand when you are learning from other people that there's something you could take away from them. Like all of our mentors, Pax, and I'll let you touch base on this. None of them really told us what to do.
No.
They talked about things that they did, and they talked about, they really more listened to us and what we were going through, and we could talk to them about certain things, and they helped guide us to eventually figure it out for ourselves. There wasn't just somebody just saying, just do this, Anthony, or do that. I mean, maybe in certain instances, because I was sometimes pretty bad about some things about losses or certain things. They told me to maybe get a little strict with things, but for the most part, it was like guidance.
Mm-hmm. Yeah, 100%. In the beginning of learning how to trade in the NASDAQ, we were $100 a tick. The big contract was $100 a tick. So I did listen to Judd. Judd told me, buy them here, sell them here. But that only lasted, for a couple of weeks before I had to do it on my own. He couldn't stand next to me all the time. I can't, the traders in the PAX group, I can't click the button for them and I can't make them not click the button. It's the guidelines and the rules of the guidelines of trading a methodology is something that is important to learn. And then we've got to make it our own. We have to learn how to adapt to different scenarios and see different things. We could be trading, both of us could be trading the opening range, the same time frame, the same everything, and have different positions on, depending on what the market is doing, what the targets are telling us, all of this. But what remains the same is how we manage our risk, or what remains common is how we manage our risk, and oftentimes how we can manage our profit and exploit it. The rest is, everything else is guidelines. The only two hard rules that I have that I pass on to everybody is to use stops and to pay for every trade. Everything else, guidelines. that we all have to use in order to put the framework around the market. Keep things simple. Take this incredibly complicated, vast web of capital flows in the worldwide markets and simplify it into some actionable daily steps and something that we can continue to repeat, continue to build on, and continue to scale up or down, depending on the case, whatever the case is.
What was the first thing that our mentors taught us, Pax? What was something that was very consistent that all of the mentors taught us?
Do you stops and if you're
Second
wrong,
trade first.
Second trade first. If you're wrong, get out. Second trade first. No, that's a great line. That's a Mickey line. Know your second trade first. So you stops and everything, absolutely everything, and second trade first. Know where you're going to get out if you're wrong, and know where you're going to get out if you're right. Your second trade first. If you know that, you can take the trade.
Exactly. I want to share a quick story about today that really ties into all of us. And I want you to think about a story with a mentor as well. And you go right after me. But second trade first. This morning I was long crude oil. I bought it. I executed it according to my plan. I bought the crude oil market right before the inventory. It's not just right before, but I bought it before. Market went down, ticked me out. I got out. Market rallied all the way back up. I watched it. Somebody asked me, are you going to look to get back into that trade? I said, no, I took my loss. It's already over. I'm not going to get back in it. And I thought about just that question. And I think that a lot of traders think about this a lot, right? Like, I did a trade. I got me out. Now it's starting to work. Do I want to get back in? And I go back to second trade first, right? I knew what I wanted to do. It got me out. But I had already started healing from that loss before I even got into that trade. And this is where a guy like Mickey Hoffman came in as a psychological mentor for me. Because when he came into my life, I remember walking off of the trading floor one time and saying, I just, didn't do so well, but, it is what it is. I'm going to come back tomorrow. I know why I screwed up today or whatever the situation was. And he's like, Anthony, he's like, that's your greatest trait. And I was like, what is? I didn't understand what he was saying to me, right? He's like, you heal very quickly. He's like, you have to continue to embrace that. He goes, you move on. And I thought about that and I said, wow, I never really thought about it from that perspective. And it really opened my eyes to understand in order to have longevity in this business, I had to continue to carry that type of thinking with me. If I know where I'm getting out before I'm getting in, I've already mentally accepted that loss before it even happens. Now, I don't want it to happen, but in my mind, I have written it off as that this could happen, right? And so you start to heal. And it allowed me to actually recognize that from his guidance to say, look, you've already made this decision. Now, if it doesn't work out, you're going to move on, right? You're not going to go back and try to relive that moment, right? And I think that's what a lot of traders struggle with is they don't think about that. They take the loss and it's like, oh, it's a loss. But now it's like, that trade's still working, or how do I go back and make that back? Or they're still hanging on to that moment when that moment is gone. Like you have to already move on.
Chasing, it forces you to chase. I'm thinking about two things that I think are very important is to heal and move on to the next trade. The only trade that matters is the next one. It's not, I plan for 100 trades down the road, but I only have to focus on the one that's in front of me. And likewise, the trades that I made in the past don't matter either. I can learn from them, and I do. What did I do right? What did I do wrong? How did I manage it? But so moving on to the next trade and focusing on that is it. And if I'm not healing from the loss, or in the way that I say it as an expense, if I'm not healing from that expense and moving on to the next trade, then I'm starting to think about getting back that money. How can I get back that money? Well, that money's lost. It's gone. It's in that by definition, it's in the past. And also another part of that is if I lost money, I'm a loser. I'm not a loser. I'm not a loser. And I don't win and I don't lose. I know that colloquially we say those words, but I don't, it's not a game, it's a business. So that is, it's an important concept for all of us to understand and to be able to move beyond and focus on the next trade. Also, I am constantly shocked at the amount of traders that don't use stops. I'm constantly shocked at the amount of traders that don't know where they're going to get out before they take a trade. It's unbelievable to me when people will tell that to me. When we were on the floor, I'd have it's not like on the screens where I could put in a hard stop unless I gave a broker a stop. I'm gonna stop out at 45. I'm gonna stop out of my shorts at 45.80 or my longs at 45.80. Well, it goes 80 off and everybody's long, and now I'm trying to sell the bid, and he's racing me, and I got 100 on, and this guy's got 50 on. So we're racing each other. Maybe the best bid I can get out in is 45.60, and instead of hitting that bid and getting out, well, fuck it. Screw it. I'm already down 20 points, 60 bid. I'll buy another 100. Now I'm averaging. Averaging a loss is what most traders do, and averaging losses is one of the reasons why most traders lose money. Great traders will learn how to average profit, not average losses. And that was a difference on the floor. Our stops can get run, and everybody's chasing, and now it's a big move. And you got a big number on, you're in trouble. And I would trade 50 and 100 and, big ones, which would be 250, 500 minis. And I'd leave with that amount on, go for lunch, without a second thought. On the screens, I've got access to every tick, so I put in a hard stop. I don't mess with it. And I don't take a trade without knowing where I'm going to get out for an expense and where I'm going to get out for profit. I just don't. It's incredibly important. It is how we last in this business.
I want to ask you, can you think of any story off of the top of your mind, like I talked about that one with Mickey, where that moment where a mentor really triggered something in you, whether it was technical, fundamental, psychological, that really helped you develop as a trader you are today?
Besides the obvious with Judd in the opening range, which was important, there's a ton of little stories. Do you remember Ross Deutsch?
The name sounds familiar, but I can't say 100% I remember him.
Ross was an incredibly, he was a great S&P trader. And his son had gotten sick with pediatric brain cancer, and he left and then retired around the time that you were starting. So it was at the very beginning part of my trading career, and I went to play golf with him, and with him and a bunch of other guys, we were walking on the fairway, and I'm like a new big-ish trader, trading 20 lots and 10 lots and things, and I called up, took my cell phone like this out of my golf bag and called the pit. And I bought a 10 lot in, and I made $15,000 on it. Ross asked me why I did that. Why'd you cover there? I said, I didn't cover. I just took profit on half my position. He said, why? Well, you don't go, I said to him, well, you don't go broke taking profit. He said, yeah, you do. Oh, yes, you do. Who told you that? And I said, well, my father-in-law. I said, your father-in-law is an order filler, not a trader. That's the biggest bunch of bullshit ever. So then he went on and told me, we talked about losses. When you take a loss, are you taking a 15,000, or is it 50, right? So what are you going to do with this? Remember, guys, these are different days and different numbers. So he went on to explain to me how he trades. He'll sell 45.90s. And he puts in a stop, he pays for his trade, takes a little profit on it, and leaves. He does not cover his shorts until they get to a place that he would at least consider getting long at. It was like revolutionary to me. And it expanded my mind. It expanded the way that I managed my profit. Risk management is absolutely key, right? And that's what gets us from losing money into break even. But learning how to manage our profit, man, that's incredibly important. And you don't see too many people talking about that. Managing your profit effectively is actually what keeps us in the business and what makes us wealthy. And we're all here to make money. We're all here to there's a difference between being rich and wealthy. I tweet about that a lot. I want to be wealthy.
I think we both can agree that a mentor can accelerate the learning curve for new traders.
Mm-hmm.
But I want you to talk about specific areas where you believe a mentor can provide the most value.
Oh, geez, from my standpoint, from my direct experience in mentoring traders, I think it's very, very important that we all have, besides the obvious of what we talked about, managing risk and the stops and second trade first. Besides that, how we conduct our lives. What are we helping? A good mentor is going to help you understand what you're bringing to the screens every day. A good mentor is going to help you simplify the complicated. A good mentor is going to help you develop a strategy of trading that fulfills three things. It's consistently profitable, it's scalable, and it's repeatable. Something that we can do day in and day out, that is going to continue to fulfill those three things. A good mentor is going to be honest and talk about their failures, and not just show pictures of their fancy cars. I'll never talk about how much money I make, and I'll never show pictures of my cars, and I've got nice cars. I won't do that. I will talk more about my failures and how I lived, not only lived through them, but thrived through them, because it actually what informs my trading now, right? A good mentor is going to be honest with you, and they're going to be experienced. They're going to know. Remember during COVID, we were limit down in the S&P and NASDAQ. I'm tweeting, don't get long, or be careful being long at the limit. And people are like, why? We can't go any lower. People literally said that to me, and people who have Discord rooms and hold themselves out as mentors had no idea how limit down works, and that you can get stuck at the next limit. We had double limit down days during COVID, or how to trade a negative market. I've never seen a market go negative, but I knew that they could. And when they did, I saved a lot of people a lot of money by reminding people on Twitter, even, let alone the people in the PAX group, don't get long here. This shit can go lower. And it did. It went negative. 40. I still have that video. I recorded it. Negative $41. We're going to plan for the inevitable, plan for the black swan events, because they'll happen. They happen rarely, but they'll happen. And I've been on the other side of a lot of those outliers in my career, but I've lived to, thrive beyond them and through them. I don't know. I don't know if that answered your question or if I just went off on another tangent.
I'm sure you answered it somewhere in there.
Yeah.
And people don't even know that there could be a limit up. I remember when Warren Buffett came in and he helped, I believe it was Goldman that day. I was actually in my basement in Chicago, in my condo, and I was selling S&P, and the next thing you know, I tried to buy the offer and it was limit up. I didn't even know we can go limit up pre-market.
Yeah.
That sucked. Another lesson learned. I was short 60 bigs. But I want to talk about how a mentor can help accelerate that learning curve, because we talk about in this show today the importance of finding a mentor, finding mentors. I think that's one thing that we've already kind of touched on. I think it's important to have multiple mentors. In my life, they were all instrumental in different aspects of my life. But how does a mentor actually help a trader accelerate their learning curve?
That is, I think that's hard to answer. I think that's going to be unique to each trader. Where are they in their life? Where are they in their career? And, how do they think of things? But when I meet people and we start talking and I start working with them, I'm going to have to take them where they are. I can't make them fit into my box or, my way of thinking. I have to take that. I have to get to know their strengths and weaknesses, and I have to help them refine their weaknesses and to build on their strengths. Right. And, which was something that Mickey was great at with all of us, was, locating that for us. You're a good healer, build on that. He told me I was the Michael Jordan of trading, the 6,000 traders that he had mentored. And 6 months later, he told me to retire and never come back, take the money, blow up and go broke. I went from hero to zero. A good mentor is going to help, like I said, simplify things and help you understand what those strengths and weaknesses are, so that you move. We're all in different phases. Some of us are consistently losing money. Some of us are break-even traders. Some of us are small profitable. If you're consistently losing money, why? Why are you losing money? And what can you do specifically? What are action steps that you can take today to stop the bleeding and to start moving into that break-even phase? If you're in the break-even phase, how do you start to manage your profit more effectively so that you can become a profitable trader? And if you are profitable, how can you exploit your profit more effectively so you can become among the 1 to 2% of traders that ultimately make a lot of money in this business? And you have to have traders that know how to do all those things, that have done all those things specifically on their own, have gone from being a consistently losing money consistently to a break-even trader consistently to profitable and to highly profitable.
I think one point I really take away from that, and I agree with you, is listening. A lot of my mentors, they let me just talk. I think most traders out there, one of the most important things I would say to you when you're talking with mentors is to make sure they listen, because a lot of this stuff that we go through as traders, you just got to talk yourself through. We know a lot of these answers,
Sure.
right? And I go back to the Mickey Hoffman thing with me and Louis and Vince and all these guys that have helped me throughout my career. I would be talking and they would bring to attention the things that I knew I needed to be more focused on. I was just kind of just blurbing, talking through some situations or even just market actions. And he's like, well, there you have it, and it's pointing out some of the things we already know, because I've said so many times, this is an in the moment decision business. If you're a day trader, in the moment is where you make your money, is where you lose your money, right? I mean, you can be the best planner of all time and have the best strategy of all time, but in the moment, if your mind is adrift and you aren't executing properly, you're toast. It doesn't matter how good your plan is. And so a lot of that is bringing it to attention. And I think that's what good mentors have done for me.
100%. That is really, really a great point. Right. Absolutely.
I want to talk about how no two traders will ever be 100% alike. And you and I witnessed this firsthand. We watched so many traders. And before I even just get into more of this, I mean, Pex, just think about this. When we looked at the whole pit, right? When we looked at the S&P pit, the NASDAQ pit, was there ever two traders that really almost did that mirrored themselves to be identical?
No, never. Everybody had a little bit of a different twist or a little bit of a different way of seeing things, right? We've talked about this a million times. The most important aspect of trading is not what's your win-loss ratio. It's how you know when to go big, go small, or not at all. How you know when to increase, decrease, how to increase your size, decrease your size, and when not to trade. We all might see the market rallying and be long, but I'm going to slap on a huge number, and you might be flattening up, and another trader might be actually getting short there. And we all see things the same way. It's just a different take on it.
So with that being said, let's talk about that, right? How can a mentor help a trader bring forth their individuality?
One of the most important aspects of that is what you had already mentioned. Listen. I've got to know, if you and I are working together, I've got to get to know you, and you're going to have to trust me, and I'm going to have to learn how to trust you. If that relationship is going to work and it's going to work to your benefit, then we've got to learn how to trust one another. And you can't do that unless you're listening to the person that you're talking to, unless you're open-minded. I think that's a hugely important aspect of it. I am absolutely a firm believer that mindset is maybe the most important. What we're bringing to the screens is maybe the most important aspect of trading. Now we all need a process that's consistent, repeatable, and scalable. And then, so listening, getting to know your trader's weaknesses, strengths, and weaknesses, and being specific about it, and taking an actionable step. Writing in a journal every day. At the end of the day, evaluating your trades, and making a plan at night, or in the morning to trade that day. What am I going to do? And then execute that plan. And then at the end of the day, again, keep notes or take notes. And at the end of the day, you reevaluate it. And when you evaluate it, now you go over it specifically with the trader that you're mentoring. And when you do, you can identify what you did well, and you can identify what you did poorly, what you can build on, how you can move from break even to profitable to highly profitable. Specifics,
Yeah. So we're in a digital world. You and I were able to meet mentors in person. I actually have mentors right now that online that I look at them as mentors,
Right.
especially when it comes to the macro side of things that I've never met. But I can read between the lines. You know, you and I have been around a little bit, right? We're a couple of Chicago street guys that really should never even it should never even have really made a buck. We should be working in the city right now. But in reality, we are in this digital world. We are in this digital space, and some people may not be able to read between the lines, right? And we can tell genuine between those that are and those that aren't. What is your advice to the people out there that are looking for mentors? And we know there's a ton of them out there claiming to be. I think some are really good, some not so much. Well, what are some things they should be looking for when searching for a mentor?
Look for people that tell the truth. Look for experienced people and people that are going to tell you about their failures and be honest about it, and to tell you how they got through it, how they build through it, and how they consistently move forward. And that's difficult to do, but it's not hard. It's not. I'm sure you'll agree. It's not hard coming from the neighborhoods we came from in Chicago, and the way that we both grew up on the trading floor. It's not hard for me to read somebody's newsletter or something somebody puts out, or even tweets, and to be able to tell this guy's legit, this guy's full of shit. I can, and I'm usually not wrong, with that kind of stuff. I think part of that is like I said, where we come from and how we grew up on the floor, and the people that we've, the collective people that both of us know that we've been around most of our lives. But and also it's an innate, thing. All those young guys that got in trouble a couple years ago, I forget their names, and but reading some of their things on Twitter, I can tell these guys are just full of shit. Why are people following these people? What is going on here? Why are you falling for this? And then 6 months later, they're all locked up. I don't know. It's just tell the truth. It's not hard. I mean, it's not hard. It's interesting to me that the most widely read and retweeted or reposted post that I had on X, I got to quit calling it Twitter and tweets, was the one that I talked about when going broke, blowing up after MF Global, and then losing 6 figures a day and continually going on, and what that felt like to go from being a rich guy to completely broke. And my oldest daughter calls it housing insecurity. We're fucking homeless. We moved in with my dad, sold my house in Lake Forest, and moved back to the South Side until I started getting money back from MF Global to rebuild my career and to start all over again on the screens. That's my most widely read and shared. I pinned it to my Twitter tweet or post. Well, it's because I was honest, and because I was open, and because I'm vulnerable, man. I'm vulnerable in the way that I tell my story. And I think people can resonate with that, because this whole thing, what did Rocky say in the movie? It's not all sunshine and rainbows. Life is going to hit hard. Well, showing everybody pictures of my BMW is not going to help somebody. It aggravates the shit out of me, but it's not going to help somebody, in their struggle when they're struggling from break even to profitable, or when they're trying to struggle from profitable to ultimately profitable. How do you do that?
I think it comes down to how serious a person takes themselves as well. I mean, let's hold everybody accountable out there, right? If you're really serious about learning in this business, you're going to read between the lines. I think you're going to have to use just some common sense. And like I said, if that mentor is not listening to you and they're telling you what to do, and I'm not saying that a mentor shouldn't tell you what to do to some respect, right? They're trying to guide you. I always look at it as guidelines, because any mentor that I've ever had that's made a real impact on me is just helped me find the path I knew kind of all along, right? I think internally we kind of already know. We know who we want to be. We know how we want to trade. We if we have some experience at least, right? But a mentor helps get you to that point. And that to me is key. Not someone taking you to a different direction that doesn't sit with you. I think that is where I think a lot of people go astray, and then they even get more confused, and they're not sure what is right and what is wrong, right? I think I see a lot of people make those mistakes out there. I want to talk about the most common pitfall that you see traders struggle with the most, and talk about the piece of advice that you would give them to work through that.
One point about what you were just saying too is I'm very systematic about the way that I trade, and you're much more discretionary. You've got a wider thing than what you're looking at. So when I'm working with somebody that wants to learn my systematic approach to trading, I have no problem telling them what I think they ought to be doing.
Because that's technical.
It is, right. And the way, and it's very specific to the way that I trade and the way I look at the market and the way I simplify all this that goes on. So I think that the two biggest pitfalls that everybody falls into is over trading. Over trading, sizing up too quick, just trading too much, churning a specific price area, or taking too big a risk. I'm going to risk, somebody had asked me what my risk reward ratio was. What's your RR? And I had to look it up. I didn't know what.
I know. There's all these new lingo picks.
Yeah. Nobody ever told me that. I didn't know what that was. But, I think that people overtrade and it's going to be either death by 1,000 paper cuts, or you're going to blow yourself up pretty quickly. Or or they chase losses, they chase missed opportunity, they chase money that they think they should have in some way, shape, or form. And when we start chasing, man, nothing good happens. Nothing good happens. So I think those are the most important aspects of trading, and I think it's important to have a solid idea, a solid plan, a systematic or discretionary plan that you're going to execute, that during the day what you're going to do. And I think that I know that when we focus on only the trade that's in front of us and executing that trade according to our plan, then that's going to keep us forward looking and not looking into the past, but looking forward to that next trade and managing that next trade. That's the grind of trading. The grind of trading is not buying evens to sell twos. The grind of trading is to make sure that I'm here for the next trade, that I do the same thing for me, that I do the same thing day in and day out, all the time, every trade, so that I can be here for the next one. Because maybe the next one is the one that goes 30, 40, 50, 100, 200, 300 points that I'm able to add to along the way. One of those big trades that happen. Anyway, I think I lost sight of what you had asked. So don't quit. Don't overtrade. Don't chase. Focus on the next trade, and realize that there's always going to be another trade, and there's always going to be an easier trade. To just slow down and relax and learn how to, slow down, relax, and execute your plan. I lost my train of thought, but I think I got the point across.
Yeah, I think overtrading is such a killer out there. But I mean, I want to go back to just clarify something I talked about, where I said that, a mentor obviously should be listening to you and not telling you what to do. But the point of that is that there's different buckets of mentors, the way I look at it, right? The strategic mentor, like Pax is talking about for opening range. If you want to learn a specific strategy, that's different, because that's very technical, right? When you're looking to a mentor or a teacher on a strategy, that's very technical. When we're talking about a trader who's been down the road a little bit at a certain point in their career, where they're starting to understand who they are as a trader, and they're looking to really get to that next level, we'll call it. This is the importance of when you talk with different mentors, or even when you listen to other people's strategies, is that not to try and get you to completely change everything that you've done, because I think that every trader, because we've talked about this, is unique in their own right. You can take bits and pieces of what other traders or what your mentor has done successful, and potentially find a way that helps you, but you have to find that path. I only can say this from personal experience, but I found my path because I wanted to find my path, right? And my mentors helped guide me to find that, right? I didn't go to, none of my mentors said, do this, this will make you money.
Nope.
Do this, do that, right? They said, if you are struggling with this, work on this. If you're doing this well, continue to do that, take less of this. They brought my problems to the forefront. They helped me address my weaknesses. They helped me put my weaknesses as strengths. They helped me with all sorts of and I know it might sound mostly psychological, although I think that that was where a lot of it came from, but it wasn't always just that. It was just understanding. I go back to my mentor, Louis Lauder, who's passed away for years now. I mean, I remember there was a day I came in and I was buying S&P or whatever it is that I was doing. We had this conversation so many times, so it wasn't necessarily just one specific day. And he's like, look at what was happening in the NASDAQ. Look what was happening over there in IBM. Remember when that stock used to matter a lot more?
Yeah.
And I was like, okay, why? And he's like, we're not just the center of the universe. You got to see what's happening in other places. It'll help you get in better and get out better. And I was just like, okay, like it wasn't that my idea was bad. He's not going in and saying you shouldn't have bought the S&P because you had a trend line there or a fib or whatever. He's saying, look around you and become better at executing in that moment. And so he brought that to my attention. So it started making me look and say, okay, maybe I have to look at these other types of markets. And so going back to the importance of like the mentor and what they help us work through as traders is they bring things to the forefront. They help us address the things that we already subconsciously, I think, know as traders, and they make us better. And that to me is, I have so much gratitude for my mentors for helping me with so many things that, like I said, some of them didn't even directly tell me certain things, but just by them listening to me and me working through it has made me a better trader and person.
Louis was and person. That's key. Louis Lauder was a phenomenal trader. A real Hall of Fame trader who's not in any books, that nobody's going to know his name except for us. And he didn't want that accolade. He just wanted to be able to go to the bank and keep putting money into it. So, one of the things in that story that Louis helped you understand, I think, is that you can be right. You can be right at the wrong time, which means you're wrong. So trading is about execution. How can you, oh, my dog's going nuts. How can you execute in a way that's going to give you the most effective market response, and taking in all that stimulus and looking at the market and then formulating a plan and executing that plan according to your own specific strengths and weaknesses, because Louis listened. Louis listened and took the time to get to know you. He knew what your strengths and weaknesses are and what you're bringing to it. And he was able to impart his wisdom based on his experience. And you listened because you knew what a great trader he was.
Yeah. I mean, and it was funny. It was like some of my mentors really didn't say much. Some of them yelled at me. Some of them, just had different ways about them that helped me, like I said, work through my issues. One of the questions that's out there in the chat, and I appreciate the questions you guys are putting out there, I think really ties into this. And this is something else that mentors have helped me along the way with, is how do you break a plateau in terms of size and win size? Once you are successful and stuck trading, 3 to 5 lots, how do you get to 10 to 15 to 40 lots? And, and someone's talking about specifically of the NASDAQ, and they're saying every time I size up, it's a loser. I feel your pain, man. It's not an easy thing, right? And I've got a lot to say on this topic, Pax, but obviously we've got you here today to talk about sizing up and how maybe you could help this trader understand a process to get to that point.
There aren't too many traders that are actively trading that have traded as much NASDAQ in the world for their own accounts as I have. And I rarely trade NASDAQ anymore because I find it very, very difficult to size up on the screens. One of the most difficult things for floor traders when we left the floor, and why so many of us blew up on the screens, is because we are constantly involved in the market, thinking that we can trade on the screens like we could on the floor, and we can't. The less we trade, it's another one of the things that I tweet a lot about or say a lot. The less we trade, the happier we're going to be. So the less round turns that I make, the less exposure to the market that I have, ultimately the more money I'm going to make, because I'm going to be fresh and I'm going to take my trade. And when I take my trade and I pay for it, I remove my risk and I take profit on it. I'm now looking for, after I remove my risk and I take profit on it, I am now looking for spots to size up. Now, depending on what the technical price for me, because I'm so systematic and so technical, depending on what the price is going to be dependent on how big I'm going to size up. The whole idea for me in the way that I trade and the way that I look at the markets and the way that I would work with somebody in this is I want to start small and go big. I want to start with a 4 lot and end up with 40 on, or start with 16 and end up with 64. After I remove my risk and I pay for my trade and I've got profit locked in, I can use that profit locked in. I'm not going to lose it. I'm going to use it to double it, triple it, quadruple it. So go from a $2,000 day to a $20,000 day. That, letting the market size me up in real time. Again, the way that I do things are it's very systematic, and it's consistent, repeatable, and skill. And I think that's what I need to continue to protect myself and from myself. I don't fear the market. I don't fear what the market. I have no fear of the market. The market can't hurt me. The market won't hurt me. The market doesn't favor me or disfavor me. It's neutral by nature. What I fear is what I know that I can do to myself. I've lost so much money by chasing money, but chasing the $1 million that MF Global took, and then lost, the remainder of the money that I had after my prop room blew up in 08, all that shit. So learning how to be systematic about my trades and let the market size me up at different points along the way after I lock in profit, learn how to exploit it. Something I call the 4 pillars of capital management is that I want to execute on every trade that I make, is to minimize my risk, to remove my risk, to maximize my profit, or to take profit and then maximize my profit. So minimize risk, remove risk, and then manage my profit and exploit my profit. 4 pillars of capital management I want to be able to do on each trade. I'm not able to do it on each trade. Yesterday I was long. I took profit, scratched out the remainder of my trade. But if we'd have gotten above 45.80 half or 45.81, if we'd have gotten above that, I would have added significantly up to 46.02. The market had different ideas. So I'm not going to size up because I've got an idea. I'm going to size up because I've got a strategy that tells me when and how to. It's different for me than I think it is for you.
It is different. And I thought you answered that really great. And I just want to say one thing about it for me, and just to kind of give a little bit of a different answer to that question. I am not really systematic about it. What it is for me is, if I'm making money and my strategy is responding very well to what I'm doing, and I'm going back, right? When I first started to up my size was the days that I would be up money and everything was working well for me. And I noticed that the responses to my strategy were really clean. And what I would do is that once I'd be up in the morning, that next trade, I would trade bigger, right? And now I was an active trader, so I was doing multiple trades a day. So if you're only doing 1 trade a day, this is difficult, right? Because you're hoping that the next day, is the day that it's working, and you don't really know until afterwards, right? So there's if you're someone who's taking 2 or 3 trades in a day, this is the type of strategy that I have implemented, and I would test myself. So I remember my first 50 lot. I'll never forget it. For 50 E-Minis, I was up good on a day, and market came to an area I really liked. I said, listen, you're going to get 50 on. If this thing doesn't hold after 2 ticks, you are bouncing out of this trade. See what it feels like. And there is something to be said. I lost on that trade, by the way, because I was obviously so nervous to be in it. The bottom line was I was able to test and see how I felt trading bigger as well, because there is something psychologically different when you go to a bigger number. I don't care what anybody says. There is no path to just trading 1s, 2s, and 3s to trading, 10s, 20s, and 30s. It's not just there. It's not a linear path, right? I mean, it doesn't just work that way, because the money makes sense the bigger your account goes. When you have that position on, psychologically, it changes you a little bit. And so I tested myself in moments when I was doing well. I know you wanted to say something in there, Pax, about that.
That is an excellent point. The which I think goes along. There's a lot of really important stuff, which goes along with the idea of letting the market size you up. But too many of us are going to try to size up just because we can, or because we think we should, or whatever. And I think when you bought that 50 lot, what did you buy them or sell them?
I believe I bought them.
All right. When you bought them, did the market immediately flip?
Years ago.
Did the market immediately flip offered? Do you remember, or did it rally a little bit and then come back down?
Yeah, I remember buying them and then seeing 'em, like, go a tick or 2 my way and then coming back down, and I was, like, either scratching or losing, like, I lost, like, very minimal money on it. I just was out of it, but I had to just it was the initial feel of just getting it on is what was so important to me. Like, I got it on. Did it go my way right away a little bit? Then it came back, and I said, "Listen, man, you've gotta get out of this." And I did it to almost relieve the pressure of just I like when I got the position on, I needed to get out of it because I was like, okay, it just didn't go my way right away. But I tested myself at that moment. I could do it.
The So the reason I ask is because I remember doing my first 20 lot, and it went my way. I don't know. I had like 5 points into it, so $10,000 profit, and then I ended up losing like 15,000 on it. I didn't do anything. Next 20 lot I did. The market went a few points my way, and I sold 5. Now I'm long 15, and I've already taken profit. And now I'm going to stop out my entry price. I'm okay. I can't lose money on it. I paid for my trade. I'm going to stay out of the way of the market. I'm going to add to it. On the screens, it's the same thing. When I buy a number, when I buy something, when I size up, I immediately pay for my trade. If it goes offered, I get out of it. If I got long, if the market goes against me, I'm out. I'm not going to hold it very long. I'm right or right out in my trades. So it's I think an important aspect of sizing up is to remove your risk on it, and
Exactly.
then you can hold on to that trade a little bit longer because you're satisfied. The difference between being satisfied and happy with the amount of money you've locked in, right? Happy is if the market rallies to 46.36 when I'm long. Satisfied is I took out of the market what I could, and then the market came back down and scratched me out. I'm not happy, I'm not thrilled, but I'm satisfied. Because I'm satisfied, I can focus on the next trade and move on. And I can look for spots to go ahead and do that again. So if I have, remember the old adage of have a hunch, bet a bunch. I don't like the word bet, but have a hunch, bet a bunch. When in doubt, stay out. So I have no problem. I have no problem sizing up. I don't trade nearly as big as I used to,
Yeah, me neither.
but I have no problem sizing up. I've got to pay for my trade and I've got to take profit on it. And then I'm looking for spots to do that again.
Yeah. I mean, the one thing you touched on is so important. And I go back to that moment for me. That moment was about being able to be confident enough to get in and even more importantly, confident enough to get out when I needed to get out right away. Because that to me is building a good habit, right? The day gave me what I wanted. I took down what I wanted. When the market turned against me or it didn't give me what I wanted on a bigger position, I had the discipline to hit the button. And that to me is where I really like to this day, I burn out of stuff fast. Like I don't even think about it. When I'm getting ready to click out of a loser, I always give my stops a little bit of a buffer. Like even today, I talked about crude oil. I gave my stop a little bit of buffer. The next thing I'm delete my stop, I burn out of it. It's over. I mean, I have no problems doing that. And I do the same thing that Pax talks about. When I get into a bigger position, I'm peeling them off pretty quickly because I don't want to try and sit in a full position that's going my way. I want to be able to try and get that position trimmed down because I know most likely, especially when you're trading indexes like S&P or NASDAQ, they're going to trade those prices multiple times. I mean, very seldom or very rarely are you picking up a low or a high so perfectly that it's not going to give you some
Right.
little move. I mean, that's why you do your 4 points off of rotation off of opening range because it's like, look, you could go back there. It's not like, I don't care if I bought the lower or sold the high of a move. I'm always like, especially if I've got it on with size and I've added quickly to it, I'm peeling off just as quick. You
Yeah.
and I could spend a whole day on this. I brought that question up because I think that's a question that a lot of people that have made some money or have gotten to some point of consistency, stability, that's something that they could seek out a mentor for. And look at Pax and I really we're cut from the same cloth and we have two different approaches, but we kind of bring it to the same place. Once again, it's going to be where you are as a trader and how you find the best way to get yourself there. Pax, we have an amazing giveaway today. I can't thank you enough. I mean, you've been so generous with your time with myself and so many traders over the years. I think that, really you've taught me so much over the years and you've taught so many traders so much. You are so genuine of a guy. Obviously I know you very well. So I know that about you, and I'm really excited about what you're doing for these traders today. You're going to be giving away a 1-hour call to, I think, really give a trader an opportunity to talk with someone like you, and for you to listen and, give them 1 hour of your time, and who knows where that goes from there. But yeah, I really appreciate you doing this, and we're going to be announcing that winner here in just a moment.
Yeah, I'm looking forward to it, and it'll probably wind up being more than an hour, knowing the way that I can talk, and maybe, and the way that I like working with other people. It could end up being a week or 2 weeks worth of a few hours. So I don't know. I do. My life, what roots me in my life now, is completely different than what it was 25 years ago. Service. Difference between being rich and wealthy. And for me to be wealthy, I need to be taking care of my mind, my body, and my spirit. What that means is, because I'm a faithful man, I need to be living in faith, hope, and love. And if I'm living in faith, hope, and love, then I want my life to be of service. If I want my life to be of service and I'm living in all of these things, as I kind of logically progress through them, then I'm giving them my time, and I'm giving them my experience. And that enables me to ensure that I'm going to keep the money that I've made the course of the last 11 years since I've been rebuilding my career, and to grow it. I'm going to continue to be profitable, and I'm going to continue to be the best version of myself that I can possibly be when I do those things, So
Yeah,
I always enjoy working with other traders. I do.
I love it too. I started this Discord. It's free. Everybody can go and check out our Discord. You find the link somewhere on my Twitter page somewhere, or maybe it's in the YouTube channel. We could drop it in there. But interacting with traders and talking with traders, it's our life. I mean, this is where, Pax and I go back to the days where we had that camaraderie. I love being surrounded by traders, because you can talk in a language that no one else understands, right? We talk about markets, and we bounce ideas off of each other, and it's really just a lot of fun. I'm really enjoying Discord. I've got a lot of cool stuff coming up for in the future with it as well. And Pax has a Discord too, which I highly recommend you look into. Now, I just got word on who the winners are, or the winner is. Drum roll. And the winner is Bradley Ward. Bradley, congratulations, man. That's awesome.
Got an Irish name, so that's a step in the right direction.
Oh boy. So Bradley, we will be contacting you. Everybody, we've been doing these giveaways every month. Make sure you're on the email list at anthonycrudele.com to be able to participate in them. Check out my Discord and Pax's Discord. We've got a lot going on there. Pax, we will introduce you to Bradley, get you guys going on the Zoom. And, look at, man, of course, you and I will be doing this again sometime soon. I hope you had a great Thanksgiving. I wish you a very Merry Christmas. I know it's hard to believe it's coming up in just a few weeks. And a wonderful New Year, my brother. Thank you again.
You coming home at all in the next month or so?
Chicago is not in my future in December. I will be in Florida working on my tan and my golf game. I got about another week or two of trading, and then after that, we got rollover coming up. I'm kind of I'm on the downslope of the year for me. But
you know what? I'm looking forward to this rollover. I am looking for my favorite.
Be alone in this conversation. Looking forward.
I know. I usually, and you and I have talked about this a million times. Rollover is my least favorite time of the year, or the least favorite time of the cycle to trade. But the end of the year roll is actually my favorite. I love December. I always have a great month. I love December. My first huge month on the screens was December of 18. We broke from 29.44 to 23.46. I killed it. Anyway, maybe it's because it's a Christmas and I feel, Christmassy and stuff like that. But at end of the year, end of the month, end of the quarter trade is my favorite.
Yeah, well, we'll be following you on Twitter to see what your thoughts are, knowing that you always have good Decembers. That's good information. Everybody that tuned in today, thank you guys so much. Remember to go and check out edgeclear.com/deli. Also, as they are the sponsor of today's podcast, and go to edgeclear.com/deli. And once again, everybody, thank you so much for tuning in. Hit that like button if you enjoyed today's show. Pax, love you, my brother. I will see you soon. All right, everybody. See you.
See you.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.